Hey traders, welcome back to the weekly Forex Forecast. Next week is likely to be a pivotal week in the markets because of the data coming out of the US. We have FOMC on the Wednesday, and also we have the quarterly refunding announcement on Wednesday as well. So Wednesday is likely to be a big day for markets. We also have on the Thursday, the Bank of England, and on the Friday, we have non-farm payrolls and employment data. Now, the big piece of data coming out next week may not even be FOMC. If the Federal Reserve comes out and kind of, talks slightly hawkish, slightly dovish, and just kind of gives mixed signals whilst keeping interest rates as they are, then FOMC itself may not actually be the catalyst that gets markets moving next week. Something to really pay attention to is going to be the quarterly refunding announcement. Now, why is this? Because this is exactly the news event which caused the sell-off in the dollar in November. So we're coming out of Halloween into November the 1st, we had the quarterly refunding announcement, and that catalyzed the sell-off in the dollar, and that was actually the top in the dollar. So you can see markets have been very, very subdued going into next week, and that's because of the data that we have coming out. Traders are waiting to see what happens in these events before really taking some big bets. So next week is likely to see the markets dull leading into Wednesday and then getting volatile from Wednesday onwards. I also want to be trading pound pairs next week, but I'll be looking to do that before Thursday's interest rate decision given the chance, and then be out of the pound pairs. So with the previous quarterly refunding announcement, we saw a top in the dollar, and it also catalyzed a major rally in stocks. Now, why was that? Because Janet Yellen, the Treasury Secretary, came out and announced that the Treasury was going to slow the pace at which they were supplying or selling bonds. Now, if you're selling bonds, or if the Treasury is selling bonds, this puts upward pressure on the yield. So as the price of bonds go down, their yield goes up. As the yields go up, this pushes the currency up. And vice versa, if you are selling bonds or you're supplying them, but you do so at a slower pace, which is what happened in the announcement on November the 1st, this is de facto bearish for the dollar, because if you're selling, let's say, just to keep it simple, 10 bonds a month, and you suddenly continue selling bonds, but you start to sell 8 bonds a month, then the reduction in supply of bonds is going to decrease the yield. Because yes, you're selling bonds, but at slower pace, so yields will come down. As yields come down, this also causes the dollar to sell off, and it's supportive of risk assets. So going into next week, pay attention to that quarterly refunding announcement on Wednesday, because that actually may be the key piece of data which dictates the direction of markets, whether we get risk on and risk off, and the next direction of the dollar and also the stock market. So what we're going to be doing in today's video is I'm going to talk you through how I'm going to be looking to trade next week around the news events, and also some setups we can take advantage of the FOMC and QRA on Wednesday, regardless of whether the dollar goes up or down. So we're looking to be reactive next week rather than trying to be predictive of these events. Okay, so if we have a look at the leaderboard going into next week, we can see the pound is still ranking number 1. This is the top long idea. It has been for a while, and it has paid nicely to the upside. And going into this week, it is the number 1 long idea still. So alongside that, we have the Swiss franc sitting at number 2 in terms of absolute performance metrics, and also the euro at number 3, tied with the CAD at number 4. So I like euro, Swiss franc, and the pound next week over and above the CAD, and I'll tell you why. Because if we're trading the Aussie to the downside, which I'm going to be looking at, the New Zealand to the downside, and the yen, well, if we look at the CAD to the long side and we get risk off next week, then that is going to be negative for the commodity currencies. And so trading a commodity currency versus another commodity currency doesn't make much sense in that scenario, when if we get clear risk off from Wednesday's FOMC or quarterly refunding announcement, that would see the euro, the Swiss franc, and the pound outperforming the Aussie, the New Zealand, and potentially even the Canadian dollar. So I like to the upside the pound, the Swiss franc, and the euro going into next week. I'm going to be pairing those with the Japanese yen to the downside, the New Zealand to the downside, and the Aussie to the downside. And then we're going to finish up, once we've looked at these markets, with the dollar pairs themselves. We're going to look at 4 dollar pairs that we can benefit, 2 from a stronger dollar after Wednesday, and $2 pairs that we can benefit from a weaker dollar off of Wednesday's meeting. And then what I'm going to do is put everything together and say if we get a bullish dollar, these are the overall markets that are likely to outperform. And if we get a bearish dollar, these are the likely markets out of these 6 here that are also likely to outperform. So it's a complete plan heading into next week. The second thing to note is that a number of these markets now have washed out their sentiment. And I did say to you in last week's video, the New Zealand dollar, for example, I am looking to be short, but pay attention to the probabilities here. The probabilities are a 70% chance of pausing, which is basically moving sideways, correcting sideways, or reversing, so correcting higher. And the same was in the Aussie. We saw this in the CAD. We saw this in the Swiss franc. And all of those have now washed out their sentiment as they've paused or consolidated or moved sideways. So certainly if you're intra-week trading, trading breakouts, that was the sign not to do that. And we discussed this in last week's video. The Japanese yen still is overextended in terms of its sentiment to the downside. So this still needs some time to wash out. But I do like yen short. So we may see a little bit more upside or a little bit more sideways going into next week. But after that, heading into the back end of the week, I do like yen shorts once again. And if I pull up the Japanese yen, you can see what I'm talking about here. This is where we got the 95% chance of pausing or reversing right down here. And then we started to consolidate. So it does suggest we still need a little bit more time in the yen. Perhaps the yen actually pulls back and tests its upper bound. That would be great. That would be the opportunity to look for shorts in the yen pairs. We're going to be looking at the yen pairs. But also, if you are looking at trading intra-week, yen intra-week is maybe not the best one because it still needs time to kind of neutralize its overall sentiment. You see this correct or move sideways for a bit longer. If we compare this to the Aussie, for example, you can see this was the Aussie where we got this on the 17th right down here as well. And see how this is neutralized, see how this is washed out, and we've had the consolidation. It's telling us if you're a breakout trader or you like to trade things intra-week, that this thing is now ripe to continue to the downside after consolidating, washing out that kind of overcrowding to the downside. And the same with the New Zealand as well. So in a normal week, this would be setting up to kind of go Monday to Wednesday. The only thing is, don't be surprised if these markets continue to consolidate just because of FOMC and the QRA on Wednesday. Very often markets are choppy leading into major news events. So it may be difficult intra-week trading, with choppy markets Monday to Wednesday next week. Just bear that in mind. Okay, so let's have a look at the markets themselves, starting with crude oil, as we always do. Now, crude oil has actually moved into the positive side of the leaderboard for the first time, but it's still kind of neutral. So we're getting, for the first time, a bullish to neutral reading in the HedgeDash app. And it's telling me that we should be focused on balance at range trading this from the low. So if this pulls back, breaches the lower bound of the 74.62, that is an area we can start to look for potential long opportunities in oil. Now, you can also see technically there's a major reversal which has just taken place. And this actually technically validates exactly what we're seeing in the HedgeDash app, which is that we should be focused. If we are going to be doing anything with crude oil, it should be looking to be a buyer or do nothing. Selling crude oil is not really an option for me going into next week. And the reason this is a major reversal is, of course, because we have a low, we have an attempt to make a new low and a failure, and then we have a breakout, and we're actually starting to see momentum here. So going into next week, any pullback in this asset is viewed as an opportunity to look for bullish breakouts. I'm going to be looking all the way up to the 81.27. If instead of breaking out intra-week, we pull back and we breach the 74.62, this is going to be an area that I'm going to be looking for a potential fading opportunity. So we trade below here, and then I'm going to be looking for 1 or 2 days bounce in crude oil to the upside. If we do breach the lower bound in an asset like this, not often do you breach the lower bound and then make your way to the upper bound within 1 week. Usually if you breach the lower bound, you get 1 or 2 days bounce, but you're not going to come all the way back up. However, if you break out intra-week before taking out the lower bound, that often sees the market moving into the upper bound. So you can break out, trade these setups, or you can trade them on a pullback for 1 or 2 days bounce. I do like to fade a lot of these moves as well. So that's what I see in crude oil. The only thing I will say is, this has implications for the US dollar. If we're seeing crude oil going up, this would actually see yields follow the crude oil price higher, and that would be bullish for the dollar. However, and also the Canadian dollar, so the US dollar and the Canadian dollar. So I would be looking at CAD longs potentially next week if you want to as well. We're not covering the CAD in today's video for reasons explained. But this is indicative of the US dollar and the Canadian dollar higher. The issue is, with FOMC and the quarterly refunding announcement, it's not a normal week. So a bullish crude oil price is not going to be what dictates the US dollar next week. What dictates the direction of the dollar will be either FOMC or probably the QRA. So that's why I'm not putting too much weight on this week. But as an asset itself, I would be looking for potential long setups, either on the breakout intra-week or trading below the 74.62 for a day trade or 1 or 2 days up in crude oil. Okay, so the first Forex pair we're going to look at is pound yen. Now, this is my favorite market to the upside, and last week I did note that this was a good market to the upside, but we needed patience. We needed to give this a chance to kind of pause and reset and wash out the bullish sentiment that was seeing this asset becoming overcrowded. And again, we just looked at the Japanese yen, 70% chance last week of pausing or reversing higher. So pound yen, pausing or reversing to the side. And this is what we've seen. Now, we haven't quite washed out that sentiment in the Japanese yen, so we may see this consolidate a little bit more heading into next week. Something very important to remember, it doesn't matter what Forex pair you're trading. Come Wednesday with FOMC and the quarterly refunding announcement, that has the ability to move all of the Forex markets and the stock market just because of the role of the US dollar as the global reserve currency. So if you're holding any trades in Forex or in stocks through Wednesday's events, you can see big moves, in these markets. So if you want to avoid being on the wrong side of that, then you have to be flat going into Wednesday's events, or wait until Wednesday happens and then start to look at opportunities afterwards. And we're going to be looking at setups when we look at the dollar pairs, for either way. So in terms of pound yen going into next week, I do like this to the upside, and I would like, because of Wednesday's events and the UK interest rate decision on Thursday, I'd like to be involved in this and out by Wednesday if possible. So what I'll be looking for is, we may see continued consolidation. I'm going to be looking for a pullback, a retest of this high, and a breach of the 18609, potentially even on Monday. That would be great. And that will set up the opportunity to look for a 1 or 2 day bounce to the upside in pound yen. Alternatively, if this market is pulling back and maybe we get Wednesday and we start to break out, that's going to be the opportunity to look for a follow through into 190.21. Now, I can either be long this market or do nothing. Selling this market is not an option for me next week. Next is franc yen. Now, like all of the yen pairs, these markets have just been consolidating as the yen itself has been washing out that bearish sentiment. So I am looking for buying opportunities in franc yen next week. What I'd like to see is, I'd like to see the market pulling back potentially first, although we're starting to break out of this kind of sideways range. But I'd like to see this pulling back next week, breaching the 16951. Now, why the 16951? Because this level and this level, these are algorithmically produced by the HedgeDash app, and it's showing you the market pricing probabilities for the volatility of this asset. In other words, the market is pricing a 70% chance of this asset finishing the week between these levels. So if you breach this to the downside and we're looking to be long, there's a 70% chance that this is going to revert and push back higher by the end of the week. That's the kind of fading opportunity that I'm looking for. Now, if we start to break out before we test this lower bound, of course, we can see a breakout intra-week and a move into the 17324. But if we breach this to the upside, I don't want to be selling this because I can either be long or do nothing. I can't sell this asset. But if you're involved in a long opportunity and you breach this upper bound, if it has a 70% chance of reverting back during the week or by the end of the week, that is a profit-taking opportunity. And the final yen pair is euro-yen. We have started to consolidate and correct, and we are kind of trending to the downside, counter trend. The overall trend is to the upside. So I can either be long or do nothing. I can't short this market next week, but if we continue lower, if we breach the 159.10, especially if we continue lower, I always like it when we breach these levels and then we run into a key area of support, for example. This would be a great place to look for a 1 or 2 day trading opportunity to the upside. And if we break out intra-week, you can look for the upper bound of the 162.49, but once you start to trade above here, this is where you should be considering to book profits intra-week, because the odds are that you're going to start to pause or even reverse above this level. So those are the 3 yen pairs that we're looking at, and bear in mind, all 3 of these yen pairs to the upside, these are risk-on trades. These are trades that are going to benefit from risk-on conditions, or they have been recently from Goldilocks conditions, where stocks are rallying. So especially next week, if you're waiting till after Wednesday, FOMC and the quarterly refunding announcement, If we get risk on, which is a weakening of the dollar and essentially a risk on outcome of FOMC and QRA, then the Japanese yen pairs should outperform. If we get risk off, then the yen pairs may struggle, especially as they're structured now, because risk off tends to see the Japanese yen outperforming. So you could see euro yen, pound yen, and also franc yen suffering if we get risk off from Wednesday. So I like these pairs before Wednesday, but if you're taking them after Wednesday, just bear in mind these setups will be best with a weaker dollar. Next are New Zealand short setups, and pound New Zealand is at the top of the list. It's ranked 5 out of 38, so I do like this to the upside. Notice how on the 17th of the month we got told right here on the close that upside was limited with a 70% expectancy. We push a little bit higher and we come all the way back and we basically move nowhere. But this is washed out, so it does set up intra-week breakouts before Wednesday. And I like that because any of the pound pairs I really want to be in and out of by Wednesday, given the opportunity, especially with Bank of England on Thursday. So any pullback in this market next week is going to be an opportunity to look for a breach of the 2.0653. As soon as we trade below here, we have a 70% chance of bouncing higher. And especially if we come down and test these highs over here at the 2.06, so essentially broken resistance with momentum over here, turning support, this is going to be a great area roughly between 2.06 and 2.065 to start to look for a near-term buying opportunity in pound New Zealand for a 1 or 2 day bounce. And if instead of trading below this level, we start to break out intra-week and you have momentum, and usually you get one piece of momentum, then a pullback, and then you get the follow through into the upper bound, that would set up a potential breakout trade into the 2.103. I can either be buying this next week or do nothing. I can't short this market next week. The next market we're going to look at is New Zealand franc. Now, I can either short this market or do nothing next week. Buying this is not an option. So if this market pulls back and we see strength and it rallies above the 0.5321 and it trades into these highs, this would be an opportunity to start to look for 1 or 2 days down in New Zealand franc. And if we fail to break the upper bound here and instead we break out, so we trend like this and then we break out, especially with momentum, very often you can look for a pullback and then a follow through into the lower bound of the 0.5212. Now, New Zealand franc to the downside, pound New Zealand to the upside, these are setups that would benefit post-Wednesday from a risk-off outcome. And you may say to me, well, I'm not going to know whether it's risk on or risk off. You know, maybe you're a newer trader. Look at the dollar. The dollar will tell you whether the outcome was risk on or risk off. If the dollar weakens, and it weakens heavily, that is a sign that the outcome is risk on. So we're seeing a weakening of the dollar. If conversely we see a much stronger dollar after Wednesday, this is a sign that the outcome was risk off. So if you do see a much stronger dollar and you get a risk off outcome after Wednesday, then New Zealand franc to the downside and pound New Zealand to the upside should outperform. And by the way, something very important, I'm not talking about a stronger or weaker dollar 1 second after the event. It does need time. You can see some whipsawing to begin with. But if come Thursday morning, for example, after you've had an overnight session, you have a stronger or weaker dollar, then you can assess, the risk on or risk off outcome of the event. So it's not an exact science looking at the dollar because, you can get some choppiness. However, it's quite a good cheat sheet if you're not sure how to assess the QRA or FOMC on Wednesday. Also, I will most likely be tweeting out during FOMC and probably the QRA. So if you have Twitter, you can follow me at Trader Fortune on Wednesday, and I will most likely be giving an assessment of whether it's a risk on or risk on outcome from these events. Next is Pound Aussie. I can either buy this market or do nothing next week. Cannot short this market. What I'd like to see is the market pulling back, retesting this prior high. This kind of stair step. We breach it with momentum. We pull back, we retest it. If we break the 1.91126, this is where we start to get into the realm of 70% chance of snapping back over 1 or 2 days to finish the week, or even during the week. But if we start to break out intra-week, so before we test the lower bound, before we get there, this market starts to reverse. And usually it will reverse with momentum. It should be clear. It should be obvious that this market has started to reverse. Here's a good example. And then we break out. See this with momentum first? We break out with momentum and then start to pull back. that's an opportunity to look for a follow through into the 1.9492. But I cannot short this market next week. And the second Aussie pair is Aussie Franc. Now I can either short this market next week or do nothing, just sit it out, but I cannot buy this market. So any pullback in this asset, if we breach the 0.57470, especially if we breach it quite deep and maybe we test this high, this would be a great place between this kind of area and the level itself to start to look for maybe a double top, start to look for a lack of momentum, and 1 or 2 day reversal in this asset. Alternatively, if we break out, and it may be the case we just correct and then break out on Wednesday's FOMC or the QRA, this would be an opportunity on the pullback to look for a follow through into the 0.56290. Now, Aussie Franc to the downside and Pound Aussie to the upside are also risk off plays. They are setups that will benefit the most in a risk off environment. So if we get risk off or a much stronger dollar, then Aussie Franc to the downside, Pound New Zealand to the upside should outperform. Okay, so finishing up the Forex markets with the dollar pairs themselves. The first two markets we're going to look at are Euro dollar to the upside and Pound dollar to the upside. So these are the markets which I will be interested in after Wednesday if we get a weakening of the dollar. So any pullback in this market, I'm going to be looking for consolidation into Wednesday. We'll likely do nothing. And then if we get, and we may even breach the lower bound first, but if we get a reversal after Wednesday, we get a weakening of the dollar, this is going to be a market I would be interested in looking to the upside into the 1.0952. Now, the second levels here you can see in gold. These are also algorithmically produced by the HedgeDash app, but they offer, instead of a 70% chance of pausing or reversing, 95% chance of pausing or reversing if these levels are breached. Now, when you have big news events or you have big catalysts in the market, that is when these can break their first upper and lower bounds significantly and move on to the second ones. So don't be surprised to see, depending on the outcome, if we have a strong catalyst one way or the other, some of these dollar pairs pushing into their second upper and lower bounds. Because of FOMC and QRA, I've added them into this week's video so you can see them and you can draw these on your charts for next week. Now, the other thing to note is if you are trading, if you're trying to fade news events like FOMC or you're trying to fade a news event like the QRA, very often you're better to do this from second upper and lower bounds than the first ones because, as I said, you can blast through the first ones. So if you want to try and fade those events, those are better faded from the second upper and lower bounds in these dollar pairs. The second dollar short setup looking at here is pound dollar. So pound dollar to the upside if we get a weaker US dollar. I've added this level on here because there's a pattern I want to show you about and why we should sidestep this if we actually get a stronger dollar. But to begin with, what I'd like to see is I'm probably going to see consolidation heading into Wednesday. Then perhaps we actually break down below. This is a head and shoulders pattern, a major reversal pattern. Maybe we do a fake out, we test this, we breach the 1.2588. But then after Wednesday, for whatever reason, we get a weaker dollar. If we start to rally to the upside, I would be looking for a potential pullback and a follow through into the prior high over here and the 1.28205. Now, the other thing to note about this is because we have this massive head and shoulders over here, what this tells me is if, especially in this market, because the pound is actually at the top of the leaderboard, if we get Janet Yellen coming out and increasing the supply perhaps of bonds, or we get Jerome Powell coming out and saying something which is hawkish and causes the dollar to rally, this would catalyze a major reversal in pound dollar. So if you are looking to be long the pound versus the dollar, you really need to be careful about getting involved in this before Wednesday's meeting with the FOMC and also the QRA, because if you're on the wrong side of this, this actually will be a major breakdown and reversal. So I do like this, but only after Wednesday, because getting involved in this beforehand could be risky. Now, if we get the dollar coming out stronger and we do get a breakdown and this catalyzes a major head and shoulders reversal in pound dollar, because again, just because I have a bullish bias on this, it doesn't mean that the outcome of FOMC or QRA has to push this higher. These markets can go either way next week. That's due to the importance of the news events. They have that market moving and market reversing potential. So we're not looking to predict those events, we're looking to be reactive. If we see a stronger dollar and this breaks down, it breaks the head and shoulders low over here and it starts to push onto its second lower bound, of course you could potentially look at fading that from that area. But the other thing to do is just leave this all together. I will not be looking to buy this at all, apart from a potential fading down here. What I would do instead is look at the next two opportunities if we get dollar strength. So that would be Aussie dollar to the downside and New Zealand dollar to the downside. So I would sidestep this and I would look to be short those two assets instead. So the final two Forex pairs then, New Zealand dollar, Aussie dollar. This is if we get a stronger US dollar or a risk-off outcome. So you can see this market is already consolidating. We've had the sentiment washing out. This is now ripe to go to the downside, but a lot will depend on the outcome of Wednesday. What I'd like to see is if this market is pulling back, I would like to see this sell off as we get a stronger dollar. So we're being reactive. The dollar comes out stronger off of the back of Wednesday's FOMC or QRA. This drives New Zealand dollar down. Then the market pulls back and that sets up the opportunity for a follow through into the 0.6017. Remember, there's a very good chance if we get a strong bullish catalyst for the dollar that these assets, Aussie dollar, New Zealand dollar, come down to their second lower bound. So don't be surprised on a much stronger dollar or a strong bullish catalyst for the dollar to see this market come down to the 0.5939 next week. And the final Forex pair before we move on to gold and silver is Aussie dollar. Again, this will be a market I'm looking to reactively trade or for trading opportunities if we get a bullish catalyst or a stronger dollar. So the dollar comes out stronger after Wednesday's meeting or Wednesday's QRA, and I'm looking for this market to sell off. And then any pullback in this market would be viewed as the opportunity to trade a follow through down to the lower bound at the 0.6498. Or conversely, remember, a very bullish catalyst for the dollar. You can see this coming all the way down to the 0.6413. Very often with those big news events, you see these markets trading to their second upper and lower bounds. So again, this is in a risk off scenario with a stronger dollar. So just to recap this, if we get a weaker dollar and risk on after Wednesday, the yen pairs are likely to outperform, as well as risk on setups like euro dollar and pound dollar. If we get risk off from Wednesday and we see a stronger dollar, then of course Aussie dollar and New Zealand dollar to the downside as primary dollar pairs. But also in risk off, you should expect to see those pound Aussie and Aussie franc pairs working better, and pound New Zealand and New Zealand franc pairs also outperforming. Wrapping up the video with gold and silver, and I'm just going to split these two in terms of risk on and risk off setups as well, like the other markets we've looked at, so we can be reactive based on what happens with the dollar on Wednesday. So if we get risk off and we get a stronger dollar, I would be looking to short gold, and any pullback I would be looking for a sell-off as we get a stronger dollar, and then any pullback would be the opportunity to short gold into the 1988.82, potentially even onto the 1960.34. And finally, wrapping up the video with silver, and this is the opposite of what we just looked at in gold. So if we get this market consolidating into Wednesday and then for whatever reason we get a bearish outcome for the dollar, I would be looking for a breakout in this market and any pullback for a follow through into the prior high and the 23.53. And if it's a very bearish catalyst, I would not be surprised to see this pushing into the 24.20. So both gold and silver provide reactive opportunities depending on the outcome of Wednesday's FOMC and QRA and whether that strengthens or weakens the US dollar. So that is it from me for today, guys. As always, I hope you enjoyed today's video, and if you did, why not consider joining us in the GMT training room each day, where I look at the best markets as well as sharing real-time setups that I'm personally looking at trading with members as part of our GMT training program. Don't forget, you can also get a 2-week free trial to the cutting-edge hedge-trading app used in today's video by heading over to www.hedge-.com.